Welcome back, everybody, to Beyond the Box. I'm your host, Mike McAra, and I am absolutely thrilled to be joined with Prashant Matta, principal or partner, I think, with Panache Ventures. Is that correct, Prashant?
That's right. Yeah,
Amazing. Well, thanks for coming on the show, and I think you're joining us from Toronto, correct?
that's correct.
Amazing. So to kick things off, for those people that don't know Panache Ventures, A, you've been living under a rock, but B, what is Panache? What do you guys do? Where are you? What's the down low on Panache?
Sure. So we are a seed stage fund, mainly focused on Canada-based startups. We're the most active early stage investor in the country, with offices in Toronto, Montreal, Calgary, and Vancouver. I lead our investments in Ontario. We're a team of operators with successful exits and a lot of experience behind us. And so we launched Panache in 2018. Mainly, we saw a gap in the early stage ecosystem in Canada and decided to do something about it. Been a fun ride, 3.5 years, made 90 investments, have taken about 30 companies to Series A and B. We invest up to $500,000 at the pre-seed seed stage, sector agnostic. And you know what? If I look back when we launched the fund in 2018, I have to say we're still trying to figure out what pre-seed is, and now I think it's a fairly well understood category in Canada. And so yeah, we're excited to work with the founders across the country and have some great LPs to support us.
Amazing. So there's a lot there. You clearly know your stuff. But before we dive into that, I wanna know your story, because when I was doing a little bit of research, I think you and I actually have a bit of a similar background because we both did our master's degrees or MBAs in France. So how do you find yourself in a chair at a venture firm in Canada? Tell me Prashant's story.
Yeah, so honestly, I fell into it. I would say most VCs will tell you they never meant to be VCs, and I think I've always been passionate about the technology sector and started my early career in management consulting. I worked with some tech and media companies. That led me to MBA, and that led me to Samsung in Korea. Spent a whole bunch of time in Korea and the Bay Area, and that's where I got exposure to the venture community. After a few years in Korea, I thought, you know what, it's probably better for my health if I move back to Canada. So I moved back to Toronto, joined Panache Ventures, had a great ride there for a few years, learned a ton, built some great relationships, and then launched Panache with the rest of the team in 2018. So that's kind of a quick story on how I ended up at Panache.
I'm surprised that you didn't just want to stay in France, assuming that you were in France.
Yeah, France was amazing. Actually, hopefully headed back next summer.
There you go. I got to tell you, after spending a year on the Côte d'Azur in Nice, let me tell you, we're evaluating every option to stay. But alas, here we are back in Canada in the venture landscape. So, okay, so let's dive in, because I think a lot of people that at least I talk to, the concept of like pre-seed, seed, Series A is still a little bit nebulous. So would be open to sort of giving your take or Panache's take on what is pre-seed, what is seed, and kind of what is Series A, and maybe what you're looking for at each stage?
Right. So honestly, when we launched Panache, our thinking was pre-seed is pre-revenue and seed is post-revenue. Lines are blurry now across all stages. There's just so much capital in the ecosystem, which I think is great for the tech sector, by the way. But the way we think about pre-seed hasn't changed much from the inception of the fund. We still believe pre-seed is the earliest stage where you attract institutional capital. So a founder may start with some friends and family money just to build an MVP, and then they'll likely look for $1 million to $1.5 million in pre-seed financing to get the product out in the market, test with customers, and start to build some traction. And that's when they generally end up raising a seed round of call it $3+ million. Eventually, these companies will get to $1 million+ in annual revenue scale, and that's when they would go after a 10 to 20 million Series A. So that's how the world looks today. But obviously, I don't think there's a hard and fast rule around any of these stages. I feel like the market moves so fast these days. We've invested in teams with just a pitch deck at the pre-seed stage, and all the way with teams doing 100K in monthly revenue and investing in them at the seed stage. So I think the broad spectrum where we play is pre-seed, early seed.
Love it. So with that, there's also the lens of the verticals though too, right? Because from what I can see, Panache is a generalist fund, as in you invest across many verticals. But that said, it also seems like you're starting to find some more investments in some certain verticals. So I'm curious, maybe how that started and how that's shifted to where you guys see the landscape today from more of that vertical perspective.
Yeah, great question. So I think to be a Canada-focused fund at the seed stage, you almost have to be sector agnostic. I think if we pick Canada, seed stage, and prop tech, we'll only have like 10 deals to do right over the fund cycle. And that's not to say that's necessarily a bad strategy. I think there's several sector-specific funds, but I also think those funds go up and down the kind of the stack of different stages. And so for us, it was a strategic decision to be sector agnostic. If we look at our portfolio, 60% is B2B SaaS or in software, B2B software in general. 30% is consumer tech and 10% deep tech, and that's kind of the overall structure of the portfolio. You look another level deeper, there are probably 5 sectors that cover majority of our investments, and prop tech is probably 15% of our portfolio. Fintech's another 15%, for example. And so for us at the stage where we invest, it's almost all about the team, market tailwinds, and kind of early product, and understanding how software has the potential to transform that industry. So maybe I'll use Lane as an example. I invested in their pre-seed round, met the team in 2018. Very early at that stage, commercial real estate was super early in the prop tech boom. And we really liked what the team had built, a very compelling product in a pretty large market. And we ended up taking that bet at the pre-seed stage. And then, you probably saw last week or 2 weeks ago, they got acquired by VTS. And so I think that's a great story. It just goes to show for us at the pre-seed, early seed stage, it's all about the founders and team. But because we've done 90 investments, you start to see these themes emerge over time, and there are probably 5 of them if you look across the portfolio that are 80% of our portfolio.
So I love that, and again, congratulations on Lane. That's a fantastic story. All the kudos to you guys and to the team there for that. And so to take that a step back for teams that are out there right now, like one of the things that I came across quite a bit, especially in the startup landscape, is VCs don't want to talk to me because I'm too early, or I don't have product market fit, or I don't have revenue. What do you say to that?
So I think the question becomes, is that response a factor of that specific VC's investment thesis, right? So if you are trying to raise a pre-seed round and you're pitching a seed investor or an A investor, more likely than not, you're going to get the response, hey, like the team, I like you, I like the market thesis here, but it's too early for me. Go get some momentum, customer traction, and then talk to me. So I often tell founders, think of fundraising as a sales process, right? You have to build your prospecting funnel. Top of funnel is your laundry list of 100, 200 VCs that you want to talk to. You qualify them, you move them through different stages. And there might be 25 that you end up pitching because they're in your sweet spot. So what I find more often than not when founders hear those type of responses, it's less about them or the business itself. It may be more about the specific VC you're talking to and their investment thesis.
I think that's such an important point, because to me, before I was in this world and looking at an outsider perspective, I thought VC was VC. And so to that point, you'd be having conversations with somebody who, is borderline PE, right? And you're looking to raise, $2-3 million bucks. And they're like, well, clearly you don't have the traction we're looking for, because we're looking for 50 million top line, right? Whereas if you had a conversation with an entity that played in the pre-seed or seed space, it's a very different conversation. So I think that to me is a really important point. So then to layer onto that, what are the conversations like around, do I work with VCs in Canada, or do I need to go to the Bay Area? Because we see that a lot as well. Like, I need the American VCs on my cap table. The American VCs know what's going on. What's been your experience with those conversations?
So I think to me, it's all about building the best investor syndicate and a diversified investor syndicate with different skill sets. I don't think any one VC is going to do everything in terms of supporting a company. It's going to do everything really well. I think every firm has one or two areas they're really good at. And as a founder, as an early stage founder, I'm probably looking to build together a syndicate that can help me in different areas. We co-invest with US funds almost on every deal. And it's less so about US funds are better than Canadian funds or vice versa. It's more about different skill sets, right? And the Canadian funds are on the ground. They can support you as a founder with everything from building your operations to building your team. However, a US VC might bring some of the go-to-market experience because they're in the market you're trying to sell into, right? So I think, yes, a lot of founders, I've heard this so many times, should I just go to the Bay Area? Yes, absolutely, you should go to the Bay Area. Why wouldn't you? You won't be doing yourself a favor. Like I said, it's a sales process. You have to build your funnel. But in the end, you also have to construct an investor syndicate that can help you. And so if you're going to the Bay Area, let's say you're a prop tech company, you go to the Bay Area and you're trying to raise capital from a consumer fund or or call it a deep tech fund. They may be able to help you on the technology side, or perhaps if you're B2C in a prop tech from go-to-market side or customer acquisition side, but they may not have prop tech real estate experience. And so what do you do then, right? And so I think it's all about building a complementary investor syndicate. And generally in our portfolio, we see it's a combination of Canadian and US VC.
Well, and on that, I don't like switching my deck between Canadian funds and US funds too. So it's, having to translate, is that revenue Canadian, USD, or what's the ask? Is it 2 million on 6, 2 million on 8? What? Yeah. So no, it totally makes sense. And I think, one of the things that we're starting to see too is those lines are blurring more and more as the landscape grows here in Canada. And so I'm curious, having started Panache in 2018, how have you seen the startup landscape and the investing landscape shift in Canada?
Oh my God, it's completely different than 2018. That was like 3.5 years ago.
Well, adding a pandemic, it's like 10 years ago, right?
Yeah, everything's accelerated and escalated, and for the better. So maybe I can talk about the tech sector and the ecosystem, and then I'll talk about the VC landscape. And so in general, I think the tech sector has so much momentum behind it, and for better or worse, the pandemic accelerated a lot of that, and I know a lot, like throughout the world and economies around the world, and a lot of people have been hurt because of the pandemic and still are, and I would say the silver lining's been hopefully some tech businesses doing good things and helping economies and obviously people around the world. So for us, when we started in 2018, the thesis was we will see a lot bigger outcomes like Shopify in Canada in the next 10 years versus the last 10 years. Simple macro thesis. And the parameters that feed into that thesis are talent, right? We have great talent in Canada. There are certain areas where we lack talent, but that's another topic for another day. We've got an emerging ecosystem where capital is starting to recycle with exits like Shopify, for example. And we've got ambitious founders that want to build global companies, right? We've gone from 10 years ago of I will build a company in Canada for Canada to I will build a company in Canada for the world. And I think that's a great story, and that's part of the core thesis of Panache. Now, how that's changed, of course, is not only, if we were seeing a linear growth, now it's exponential. And a lot of that is the pandemic accelerated, like I said, digital transformation across different sectors. Every single industry is trying to figure out, coming out of the pandemic, how do we improve our operations? How do our employees have a healthier, happier lives, both at work and home? And how do we keep everyone connected? And once we get to the health crises, what are the learnings? And in all those kind of themes, technology is core to it. And so I feel that the next 10 years, we're going to see some great success stories coming out of Canada, and we're already seeing founders coming out of big tech companies and starting new companies. And there's a lot of the great resignation, as I hear, is helping the startup creation in Canada. So I think that's very positive. Not all rosy, but I think in general very positive. On the VC landscape side, I've never seen so much capital in the Canadian tech ecosystem, both from Canadian VCs and international VCs. I may get these numbers wrong, but they're, I think, in the right ballpark. Last year, about $5 billion went into the Canadian VC landscape. This year, I think September 30th, Q3, we're already about $9 billion or so. And it's going to be a blockbuster year in Canada, no doubt. The rounds have gotten bigger, and there's a lot more capital at all different stages. Pre-pandemic, I would say most international funds, specifically US funds, would probably have a cadence of coming to Toronto or Montreal or Vancouver, one of the core markets, such as Calgary, on a quarterly basis. Now it's a weekly cadence because deals are getting done on Zoom, right? And so I think that has completely changed the amount of capital that is available to Canadian founders, and net, that's amazing for our ecosystem. So to summarize on both those topics, I'm hyper bullish and super long on Canadian tech.
I feel like you're in the right job right now, given that thesis. That is a positive thing. So then to flip the coin then, from a founder's perspective, I'm curious, what are the questions that founders should be asking the venture funds when they are seeking capital, assuming you get to that point, you have the relationship and you're getting there?
Mm-hmm.
What are those questions that they should be asking, at least in your opinion, of the venture when you consider how much cash is out there and available?
So I think any founder, similar to how you research your customers to sell them a product, research investors you're talking with, right? And talk to the founders that they've invested in. Learn about their investment thesis, learn about their perspective on your specific sector, right? And look, if you're talking to a generalist VC like us, we're not going to know your sector as deeply as you, but we've probably made investments in that sector, and we have general understanding of the market. So get that perspective, understand how they work with portfolio companies, how they work with founders, do some references. Similar to how a VC would do references on a founder before they make an investment, a founder, I think, should also do a reference on their investors, because it is a 10-year relationship. So you want to make sure you're aligned on expectations and the future of the business. And so my suggestion is always get to know investors you want to work with as well as you can. I would say it's a lot harder to do on Zooms. I've seen a lot of founders that I've frankly invested in. We may have met on Zoom for a few times as we were going through due diligence process, but then we met up and spent time together to get to know each other, because it truly is a 10-year commitment. So those are some of my suggestions to founders who are looking for capital. There is no shortage of capital. Do your homework and figure out the investors. Like I said, figure out a syndicate that can help you, and figure out investors with different skill sets you want to work with.
And I love that, but I think the counterpoint is like, all that takes so much time, right? And I've got to grow my team, I've got to grow my revenue. What would you say to founders that are like, I would love to do that, but like, I need to find the right VCs. I need to get the check, mm-hmm. and I need to move on and keep growing. I can't, like, that takes so much time. What would be the counterpoint to that?
I would say talk to other founders in your sector. They will tell you straight up which VCs you want to talk to. That's the easiest way to screen funds. Because I think this is such an important relationship. Yes, it takes work, but you have to do the work. It's the same thing on the VC side, right? We will do our jobs and do our due diligence before we make an investment, and it's such a long-term relationship that you're building. So yes, it takes time. And I know it can be frustrating for founders sometimes, but the simplest, easiest way is call other founders in the sector, and they'll tell you, here are the 10 VCs I recommend you should talk to.
Well, and on that, personally, I found that was an easier way to get introduced into the ecosystem, was by reaching out to fellow founders and playing that, I'm the same as you card. And typically, you can speak the same language because you are founders, and then you can build out that intel. So I think that's really, really great advice. And so to shift gears just a little bit, I don't know if it was a strategy or focus, but Panache has really now got a lot of investments in the prop tech space. And I believe it's my understanding that you're leading or largely leading that initiative at Panache on the prop tech side.
That's right.
So I'm curious, with this obviously having a real estate lens, this podcast, I'm curious, what are you excited about in the real estate space, and what are you seeing come across your desk that's really exciting, and whether it's investment worthy or not. I'm kind of curious on what's getting you moving.
Anything that gets folks back to work in the office. I mean, so look, jokes aside, I think the world has changed forever, and my personal view is we're never going back to the office full time in the way it was pre-pandemic, right? And so on the commercial side, we're looking for technologies that bridge this hybrid working environment with your physical space, right? And Lane, for example, launched a Flex product to help with that. And if that was a product or a startup on its own, we would have probably invested in it, right? And so on the commercial side, we're looking at that. We recently invested in a company called Altrio, which is on the deal management side of helping, I would say, smaller real estate investors figure out opportunities in the commercial real estate, especially now in this environment. And so on the commercial side, it's been mainly around bridging that gap, finding net new workflows to automate on the deal side. I think another area we've looked at on commercial side is warehousing, just sheer volume and growth in the e-commerce and logistics sector. I think warehousing is another area where we've placed bets. So that's on the commercial. Residential is a different story. It's I feel like initially early 2020, when the pandemic hit, everyone was a little bit worried about what was going to happen to the world. But oh my God, the residential market, at least where I am in Toronto, is it's unbelievable what's happening. So we've made several investments in the real estate side. I think most of them have been everything from co-living to help me find and buy a new home, to help me find and invest in an investment property, right? So anything that can lean on the macro tailwinds in the residential sector. We're also an investor in a company called Yuhu, which is call it a property management software platform, but their initial entry point with buildings or residential buildings is tenant experience or something more about resident experience, kind of what Lane does on the commercial side. And so trying to find pockets in different areas, and I think so far we've seen great momentum coming out of portfolio around prop tech.
So on that lens, are you only looking at Canadian firms, or are there American firms as well in that? Like, do you draw the line at the 49th parallel?
Yes, we do.
Okay.
That's not to say that we don't invest in the U.S. market. We do, but we're not actively scouting, right? And the reason being, our investment thesis focuses on Canadian founders or Canada-based startups. Most of our companies are selling into the U.S., right? So we do have exposure to the U.S. real estate market, for example, but more so through our investments in Canadian startups.
Love it. So when the industry is looking at technology and they're looking at ventures, let's talk about the residential industry specifically, perhaps the realtor community, the association community. I would say 3, 4, 5 years ago, there was this potential view or optic that technology was coming to replace certain things or change the way that business is done. Now we've seen over time that actually it's been more of a shift towards empowering higher value interactions with the consumer. I'm curious with what you're seeing, is it more of that empowering of the existing industry there and streamlining and making it more valuable, or are there still those people that are coming out and the word that you used to see all the time was disrupt. Whereas to me, I'm not sure if I'm seeing it as much anymore, but I'm curious about you.
Yes, you're right. I think most of on the residential side, most of the software companies we see are more enablement technologies to assist a buyer, for example, to do all the things they need to do, or assist an agent for them to deliver services to the end consumer. But I do think if you're talking about are the real estate brokers at risk, not now, I don't think, not in the near term, but super long term, probably. I would say, if you look at some of the industries such as insurance, those industries are also with similar kind of complexities, are also starting to see direct-to-consumer products. You already have direct-to-consumer products in the U.S. market, and Canada is catching up as well. There are new products like reverse mortgages that are coming up as well. Like we're an investor in a company called Fraction that out of Vancouver. And so I think those opportunities are still nascent and early and are starting to come to market. But like any industry, it takes a long time for that to happen. And so my view is sooner or later that will happen. I mean, I met a company the other day trying to use crypto to buy and sell homes. And so is that going to happen? Maybe not in the near term, but will it happen long term? Possibly, yeah.
Well, and on that, I'm sure we could have an entire podcast about, a metaverse with Web3 in which we have, digital twins in which we're actually buying that with crypto that's backed by physical. But you know what? We'll save that one for another time. So to ground it some more tangible things, we're going to bring this home with a couple more questions. But one of the things that I came across a lot with my founder hat on was, I'm reluctant to reach out to the venture community because I don't want to. People say you have one chance, right? And I don't want to come across as not knowing my stuff or not having enough traction. What would you say to that?
So I don't think that's true, at least from my perspective. I think you can probably, as a founder, you can probably learn something new by talking to the venture community, either because they've made similar investments or they have exposure to your sector. And so if the conversation is positioned as let's get to know each other and talk about the market, I think it can be a fruitful discussion. I do agree that if you're going to pitch, then you want to go with in a position of strength, and you want to be prepared for it, right? But I think if it's more about let's trade notes on the sector or let's get to know each other, no problems at all. You should totally do it.
Which to that point can give you that comfort whether or not you have the strength to take it to that next step to pitch. Right. And I think what we've seen a lot is that focus on the relationship first. And a lot of people, I think, will initially put that to the side. But the reality is, to your point, if there is a check getting cut, this is a 10-year, if not longer, relationship. Mm-hmm. So perhaps you can start that by not coming with your hat in hand and perhaps coming with, hey, let's share notes on the industry. So I think that's really, really great advice. So then to round this out, to take it further, if I am a tech founder right now and I want to get in touch with yourself or Panache, what is the way to do it? But what is the best way to do it? Let's ask that.
Prashant at Panache.vc. That's the best way to do it.
Cold,
yeah. No, I've met founders who have reached out cold. I've met founders that reach out through friends or other founders.
Amazing.
I think it's a little bit of time management on my side, but I'm always happy to speak with founders and help them along the way. And I would say most VCs are fairly accessible, to be honest. And so I would say always have a valid reason to connect because you don't want to waste time and I don't want to waste time. But I would say most investors, at least every member of the Panache team, I can say for sure, is fairly open and available to assist founders.
There's the second similarity. You're a man that also manages inbox well. There we go. We had MBA in France and manage inbox well. So I love it. I knew we'd be good friends. Well, thank you so much for coming on the show today, Prashant. It was extremely valuable. So excited to see what's next for you guys. And look forward to connecting soon in person, hopefully one day.
Yeah, looking forward to it. Thanks for having me.